Do you remember the woman that had employed almost 30 people just by selling fritters from the streets? She had employed people to sell fritters on her behalf around the city of Lusaka. Here's a clip.
By the time we will be knocking off, we will have some food for our families. We are able to take care of our families from this business, and we don't go about begging.
Okay, so we're going to analyze the fritters business using the small business modeling system. This is a system that we use to analyze most of these are small businesses: fritters, pies, shawarmas. You mentioned it, small groceries. This is a system that we use it. So we're just going to put in a few inputs, then the system is going to do the analysis. Then we'll proceed from there. We'll look at cash flow, revenue projections as well, and some graphs. Yeah. So the first assumption is that we're selling each fritter at 3/4 for 26 business days in a month. And at the moment, we're starting with 50 fritters per day. And our sales, okay, let's just drop that to 0. We'll change that later. Current inflation rate is at 7.5%. Tax rate is at 5%. Sales growth rate is at 0. We should reduce that to 0 because we're starting at 50. Then our capital expenses, capex, we'll spend 420 on braziers, pans, pots, and other equipment needed to make fritters. Assuming that business levy, because you're trading from the street, business levy could be about 250 for the whole month. Let's move salaries. We don't have salaries at the moment. So then you're also spending a 150 on charcoal, and you're spending a 527 on flour, yeast, cooking oil, and other ingredients that are needed to make your fritter. Okay, so if we're making 50 fritters per day, then at the end of the month, our revenue is somewhere around 3,900 kwacha. 50 fritters per day, with each fritter going at 3 kwacha for 26 business days. Revenue is about 3,900 kwacha. But then our variable costs are very high, so we're making losses, and our net profit is in the negative 9,900. So we're making serious losses. Let us try and increase the number of fritters that we're making to 300. So at 300 fritters per day, our revenue is about 23,400 kwacha, which is more than our costs. And now we've got a net profit of 9,548 kwacha. So at 300 fritters per day for 26 business days in a month, and we're selling each fritter at 3 kwacha, our monthly revenue is 23,400 kwacha. And our net profit after all taxes and deductions is 9,548 kwacha. Let us increase this once more. Let us do 600 fritters per day. The woman in the video could have been doing 600 fritters per day, judging by the buckets that were in the video, and also that she was employing 30 people to go and market those fritters for her. So if we look at the revenue projections, once again, revenue is now at 46,800 kwacha, and net profit is 32,948 kwacha. This is for 600 fritters per day. And now let us assume that the business is actually also growing. So we're going to put a growth rate at 5%. So if the business is growing by 5% every month, by the 12th month after 1 year, the revenue could be close to 80,000 kwacha, and the net profit is about 56,000 kwacha. So it's possible for her now to actually employ those 30 people to sell fritters on her behalf. Now let us assume that she's paying them 1,000 kwacha each to go and sell those fritters on her behalf. So salaries is 30,000. That's fixed costs. So after adding salaries in the first month, the net profit is now 2,948 kwacha. The revenue is still 46,800 kwacha, but net profit has now dropped. And after 1 year, net profit is 24,319 kwacha. So she still has enough money to start another business, even open a full-fledged restaurant. And if we look at cash flow, net cash flow, it's in the positives. She's doing very well. The business is booming. And let us look at the graphs. Let's start with cash flow projections here. Net cash flow is up. Total cash inflows are up. Business is doing well. Cumulative profit is up. Cumulative profit compared to revenue, net profit, and units sold per day. As she keeps producing more units, more fritters, net profit is also going up as well. So she's doing very well for herself. So the small business modeling system allows you to model most of these small businesses. It also allows you to know how much money will actually be needed to run the business at that scale. So for her to run the business at that scale, the total startup expenses is about 31,000 kwacha, 347. We've also included, we've assumed that she's paying each of those workers 1,000 kwacha each, and there are 30 of them. Yeah. So the startup expenses is about 30,000 kwacha. This small business modeling system also gives you a break-even analysis. So for her, if she's doing 600 fritters per day, break-even units is about 14,458 fritters in a month. Yeah, then daily break-even is about 556 fritters. Then break-even sales is about 1,668. So perhaps that's how she's able to employ so many people to sell fritters around the city of Lusaka. You can get the small business modeling system using the link in the description, and there'll be a link in the comments as well. If you found value in this video, please share it with your friends and family. Thank you.